Hello and welcome to Trading the Trend. My name is James Boyd. We welcome all of you here today. We got Brent Moores in the chat. We welcome him. And also we have many of you here today like Bill, Lisa, Bush, 8531, Grace, Will, or WWW, and Crispy, Robin, and many others. Welcome to all. Let's go ahead and hop right in. Now just remember this class is on Trading the Trend. We're trying to focus on something that's probably 2 to 3 weeks to maybe 2 to 3 months and or longer. If some of those moves happen earlier than that, hey, there you go. But we're trying to kind of get something where there is a trend, not just something for 1 or 2 days. Now, so I would kind of think of this as more like swing trading to intermediate. Now, as we hop right in, remember, we're going to talk about stocks. Our examples have been stocks, but also from time to time, we will do options as well. We'll talk about why we might use the differences between one strategy versus the other, okay? And also remember that options carry a high level of risk, not suitable for all investors. When we talk about examples and providing information, it's provided for general informational purposes only, should not be considered an individualized recommendation. Also, remember that investing involves risk, including loss of principal. And when we talk about options, you want to be aware of what are the option Greeks, at least the 4 major Greeks of delta, gamma, vega, and theta, know what they're having a sensitivity to and how they change. Okay, and also today, what I want to talk about is kind of walking through the format of kind of breaking down the market. Our focus this week has really been looking for like W patterns, V patterns, channel type setups. And also today I want to include maybe continuation patterns, as many of these stocks have had relative strength and some might be kind of showing a little entry after exhibiting relative strength. Now, I do have some questions that came up from Tim and Dennis, and I have those marked down. And so Tim and Dennis, I want to make sure I answer your questions. Now, let's go ahead and hop right in. Now, when we're looking at the market, I'm going to start with my list number 1 here. Now, we're not trading futures. We're just trying to kind of use futures as an index to something like copper, like crude oil, like gold, like silver. Okay, we'll just stop right there. Now, what you're now going to notice is if we look at, let's say, copper, the top row, it's actually been quite strong. And we're kind of using futures as a way to kind of say, geez, maybe what sectors could we look at? What stocks could we look at? And so on, right? There's a relationship there. So if we look at copper, you're going to notice that that is also hit it's hit a 20-day high for copper, okay? Hit a 20-day high. And you're going to see that on the right-hand side, there is a little continuation, okay, on that breakout. So that last column, breakout, the label's breakout. And it shows like, is the breakout like today, or is it a continuation from yesterday, and so on. I'll pull that over in just a sec. Now, crude oil, we know that it hit over 80, yesterday? Sitting here about $78, down a little bit. What we're also seeing, speaking of movement, is gold. Now, gold at 27.53, up 36, about 1%. Gold is also showing a close above the high of the low day and or to hold. Trade above the high of the low day for gold. And remember, a lot of people didn't buy maybe that we were lower inflation. I mean, a lot of people have been thinking that for a while, okay? But maybe kind of using that softening softening on gold prices a little bit, and then trying to buy into that to establish more of their position. We'll look at silver, gold in just a sec. Silver also there as well. Not showing on silver anything that we saw on gold. So right now it's really more about, let's say, gold. And if you take a look at that just real quick, and we'll just pull this up so we can see gold price. If you look at, let's say, gold, what do you see here in gold? Now, I'm interested in knowing what you think here. Do you think we're at resistance? Lisa, I'm going to put you on the spot. Dennis, James, do you think we're at resistance? Or do you think this is gold maybe trying to smash its way through the resistance area? Now, a lot of technicians would say, yeah, I'd like to see a pullback, and if we pull back, then I'll get in. And then you check back with them, and they never get in, okay? So, be careful what you say here, okay? Now, when you look at, let's say, Ben taught futures this morning, but we might be thinking, well, geez, what are some stocks that are correlated to the gold price? Okay? Or what are some ticker symbols that might have that relationship to what the futures are doing? Come on, type those in. Now, I also want to take a quick look at, let's say, copper. Now, this is not a bad thing for copper, right? Copper, for example, had the diagonal breakout. We talked, now, by the way, on Tuesday, we talked about the industrial sector and the base materials sector. Is there a relationship between industrials and materials and copper and gold? Well, I think if you watch Friday night, one of the shows on trying to find gold, they have a lot of industrial equipment out there, okay? And base materials on obviously trying to get the precious metal. Now, the other thing to kind of think about is we talked about steel as well on Tuesday and Wednesday. And so when you look at steel, copper, gold, and so on, it's kind of right on the backbone of those two sectors of industrials. And when I say industrials, think Caterpillar, okay? And you're talking about base materials, the precious metal itself, okay? We'll throw in steel as well, okay? So that's kind of the first takeaway that we could see. Now, when we talk about the indexes, okay? So keep in mind basic materials, because we saw what copper was doing, silver. Let me take a quick look at just briefly silver, okay? If we look at silver, is it breaking out like gold is? Is it performing as strong as gold? It's not. It's lagged, okay? Gold is being stronger, meaning gold is up higher, okay, to let's say what silver is. Now, if you were a little confused on that, you could always just type in gold just real quick again. Say, I want to see that difference there. Bring up the relative strength, and you could just benchmark it, okay? What are we going to benchmark it to? Well, we're going to benchmark it to silver, okay? Now, if I did this, pull it up, there's the relative strength. We don't want the SPX. What we're asking is, where is the strength? Is it in gold? Is it in silver? Are they the same? What? Let's pull it up and use our tools. What a novel idea. Now, if I pulled up and said, look, I want to compare this, we're going to use SI as the benchmark. What you're now going to notice in this case is if you look at, let's say, the relative strength, okay, the benchmark there being SI, gold underperformed for a little bit. But you're now going to kind of see that in the last little bit, gold and silver kind of more in line. And it's that strength or relative strength is not probably as strong as you would really think it is. So the more of the story I take from this is don't sleep on silver. Silver has been quite strong on a percentage basis. But when you look at the price, which one is hitting a new high? Which one has colored moving average lines green and so on? It's gold. So more of this story is don't fall asleep on silver, okay? But it's underperforming gold a little bit. But historically, silver's been quite strong too. Now, I want to go to just real quick the indexes, just kind of give it a visual look on them. When we go to list number 2. Now, by the way, I'm doing this on purpose because one of my fears is like, if I was watching someone kind of look at the markets, do they kind of have a routine-based way of looking at the markets? That affects kind of how fast you are to find things, see things, and so on. Now, if I go to, let's say, the VIX, the indexes, the first one on the top, VIX down a little bit. Now, that's not bad, okay? You like the VIX down, okay? Volatility down, probably prices up or index levels up. Now, Dow is down 22. That's not bearish. It's just down a little bit. We do see that the Japanese yen up 0.75%. Probably been one of the stronger moves we've seen in the yen lately. If you look at it, it's kind of has more of a bite to it. Don't see markets falling apart, okay? Now, can you get the Japanese yen to go up and the market to go up? Yeah, but if you get it always goes back to, it's not that it's up. It's when it spikes up, okay? Like the VIX or the 10-year yield and so on. It's not that it's up. It's that if it's aggressively going up, then you could start to see more fear in the marketplace. We don't see that yet, but it is up, okay? Now, Russell's up 2%. Excuse me, not 2%, 2 points, about 0.1%. S&P up 2. SOX, semiconductor, up 87. NASDAQ actually up about 2. Pretty much flat. Now, let me go back to this chart. Dow Jones, okay? Let me take a little off this bottom here, okay, so we can see it. So first off, when you look at the Dow Jones, if yesterday was the breakout, I say quite a few times that a lot of times day 2 of the breakout tends to be a red candle day. And here we are again. It repeats. So it's not unusual to kind of see that the second day of the breakout is down a little bit. A little bit. Not, it's just kind of flat, but it's holding. Another point of emphasis is kind of traded down to the midpoint of the range. Somebody bought at the midpoint of yesterday's range. Not unusual, see that a lot. SPX. Now, when you look at the SPX, and if we were to kind of take this from the very tippy top, what you're now going to notice is kind of like diagonal resistance. Now, the risk to the S&P, of course, is this a hammer or is this a hanging man? Ooh, man, that's a loaded question. You could say it was a hanging man if you thought it was at resistance. Now, I want to kind of look at, let's say, what the sectors are doing, okay? Because if we have VIX falling, if, for example, we, let's say, have more sectors participating, it might lead us to think that that is not as maybe as hanging man as it looks, and there might be a better chance for us to try to breach the resistance level, which the NASDAQ looks the same. Quickly on the sectors, let's go to the market watch. Let's go to list number 3 here. And if we go to list number 3, sectors, okay? Now, remember what we said. We want to see more participation. Now, we're not against, we've been talking about energy for 2 weeks plus. We're not against energy, but we don't want just energy, okay? You want to see that broad participation going up. Now, when we look at the trends, what you're now going to notice is more participation. The only sector that is still below both moving averages is yours truly, consumer staples. Now, that's not necessarily horrible. If people think the market is going to bounce, they just might be lagging to buy the staple-ish areas, and they might try to buy the areas that might be a little oversold, that might be a little bit more volatile in terms of bouncing up, and have a little bit more volatility. And if you want to include fundamentals, maybe more growth potential upside. Basic materials, okay? There it is, up a little bit. The one today that was different, though, that we see right here is, now hold on. Why am I leading the witness? Can you tell me anything that was materially different today than what we've seen? We talked about energy 2 weeks ago. We brought up base materials and, let's say, industrials. Fine. Yesterday, we talked about the financials and probably the most important metrics we've seen from the financial companies themselves. Talked about that. Any different? Okay, Michelle nails it. Yeah, utilities. Hello, utilities. So utilities up 2.38%, and you're seeing they're punching, okay, that 20-day high. It is also, for example, getting a little crossover, hence the green box with an X, X meaning crossover today. Script's not guaranteed for accuracy. Confirm that. Or timing. Now, you're also going to notice that in 2 days ago, the moving average of the 10-period moving average went green. 1 day ago, or today, I should say, it just turned green. And you're seeing here on these sectors a little green. Okay, fine. Now, so what does that utilities look like? Well, let's pull it up. Okay, heck, don't just sit there and talk about it. There's what it looks like. Now, this is kind of unique because it's kind of been the pattern that we've been talking about a couple days so far. Is this breach below, this breakdown of support, trading below support, and then it snaps back to the upside. How many of you are starting to see that pattern more and more and more and more? How many of you actually said, James, you pointed it out, but I'm actually starting to see it now? Now, you're going to notice that kind of maybe this prior high, maybe right in there. Now, if we were going to speculate, if utilities were going up, where do you think interest rates have been going maybe in the last 2 to 3 days? Where do you think they've been going? Well, if utilities are going up like that, we would speculate that maybe that 10-year yield might be dropping low. Oh, well, look, lo and behold, there's correlation again, just hitting me right in the face, okay? So you might be thinking, hey, look, if those rates cool a little bit, or some of that economic data in terms of inflation, CPI, PPI, and so on, if that cools, could some investors be trying to get in that some of those oversold areas, namely the utilities? Now, by the way, we did see actually healthcare firming up a little bit and real estate firming up a little bit, okay? Now, I want to kind of go into some individual names for just a moment, okay? Let's kind of start just real quick with the Dow Jones. So first off, if you were watching me, okay, one of the things I'd be thinking to myself is create a list for yourself. Maybe make a list of futures that you like to follow that correlate with an index that then correlate to a sector. Fine. Second, have a list of indexes. Now, I also included the sentiment index list on Monday. If you didn't see that, go watch that. And what you're going to notice is what we did is also getting into sectors. Make it a list. Okay, little homework activity for you. Get her done. Okay, don't tell me you're busy. Okay, I don't want to hear you're busy. I'm busy too. My wife still tells me what to do and where to go and how to get there. And I just say, yes, ma'am. Okay, so I'm telling you what to do. Go make a list of futures, indexes, sentiment. Let me show you that. And then sectors. Sentiment, if you said, hey, I don't have that, there's the list that we're going to use in the webcast. Now, do you have to do it? No, not a recommendation. But you can. You could consider it. All the above. Now, let's kind of get into just real quick the chart for just a sec. So before we look at a first example, okay, what you're now going to notice is Tim and Dennis had a question on the chart, okay? Just briefly before we look at our first example. Now, I'm going to share this chart, okay? And remember, just briefly, let me give you a little explanation because there's been some question on it. Yeah, Jay Richardson says I'm busy doing the homework. There we go, okay? Now, if we take a look at this, so remember, just simplicity is, and I'm going to pull up the first example that I want to pull up. And by the way, this goes back to a question. Oh, who asked that question? I think it was Bob, okay? Okay, now, the moving averages, we got a 20-period moving average that lags the price more than the one that's closer to the current price of the 10. It's a whole moving averages, okay? Now, the question was just briefly on the shading, okay? The shading. And so you might say, well, I have the moving averages, but I don't have the shading, okay? So let me kind of explain something there's been a question on. So you'll see that the whole moving average, there's a 10. Whole moving average, there's a 20. Fine. But what maybe you don't have, and I think it was more Dennis's question before we look at this example, is you might not have what they call the whole moving average cloud. The cloud, or the coloration, is just really that green color when the 10 is above the 20, or red color when the 10 is below the 20, okay? So now what you're going to notice is you might say, well, James, I have the moving averages, but I don't have the cloud. Now, one of the things you need to understand is, we talked about before, is you can change that one to a 30, okay? However, if you did that, you need to understand that the whole cloud is based upon a 10, 20 period moving average. So if you said, I want my whole moving average to be like a 30, then you need to take the 20 off and change that to a 30 so that they're in line with each other, okay? And how do you change them? Click right there. How do you change them? Click the settings gear right there. There you go, okay? Now, Dennis, let me know if that answers your question. Tim, that answer your question? Okay, go up to the setup, top right, open shared item, not too bad, and then just copy and paste. Now, I want to kind of speak to this for just a moment, okay? So how do we use it? I mean, you can go out and buy tools left and right, okay? You can go out and buy tools left and right, but how do you use them, okay? And maybe when to not use them, okay? So all it is, I just copy and paste what I sent to you in the chat, go preview, and then import that. Now, this one does have the MACD on the bottom, okay? Import that, fine. Now, I want to kind of speak to this for just a second, okay? So how do we use it? Well, what we're doing is we're kind of watching the coloration of the lines. So if I look at this just real quick, is we talked about how Cisco, and I believe it was Bob, okay? Bob Arnold, to be exact. Let me know if, Bob, if you're here, let me know if that was you. So I want to kind of talk about the timing, okay? And I want to talk about position sizing and maybe dollar cost averaging and so on. What you're now going to notice is if it's falling down, the red line is telling us no bueno. Okay, now I don't speak Spanish, but I know a little bit. But if we take a look at this, it's just not giving us an entry, okay? Red line, no. 20-period moving average, no. Okay, go the next day, no, no. Okay, go the next day. Okay, now the moving average is showing red, okay? And the 20-period moving average is showing red, but the candle is just kind of like a hammer, okay? And it makes me think of the song all the time when I say hammer, okay? Now I'm kind of dating myself. But if we take a look at this, so someone asked me last time, do you still have the baggy pants from 1989 or 1992 or whatever it was? No comment. No comment. I'm not going to say it. I'm not posting any picture of JB with hammer pants. Okay? No. No, 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 no. Okay, now stop laughing. Now, if we see the hammer candle, we wouldn't be surprised if maybe there was a color change from a red to a green, maybe sooner than later. We don't know. Speculating. Now, one day later, we see the red line go from, well, the moving average line go from red to green. All right, now let me kind of speak to that for just a second. I want to kind of talk about something we might consider here. Now, we know that in position sizing, if I said, hey, I'm going to get in the position, we could just do all at once, okay? And I'm just going to say 1x. We're just going to get on all at once. Or what we might do is say, look, I'm going to get in like half. I might get in, let's say, if I see that, I'm going to get in half. If I see the other moving average line, I'm going to go half. Okay, that could be how you could look at it. Or you could actually say, well, you know, if we get that moving average line to go green, the 10, I'm going to get in a third. If we get a crossover or the 20-period moving average go green, okay, I'm going to get in the other third. And then if I get that last bullet point that we look at, whether it's the 20-period moving average or the cross, we're going to get in the other third. Because remember, it's really 1, 2, 3, right? This is what it looks like. 1, okay? Now, what you're going to notice is 2 on the 20-period moving average. At 20-period moving average, and by the way, that was probably a day earlier. You had a crossover the day before, and you had the 20-period moving average go green. So an investor might say, look, I'm going to get in a third. Now, why do they get in? Why do some investors try to get in on entry 1? Because it's close to support, because it's earlier in the setup. The con, you don't have any confirmation. That's why the investor might consider a smaller position. Now, James, it sounds like an investor did this. They might not want a watch list of 2,000 stocks. That is correct, okay? If they see the moving average crossover during the day or at the end of the day, they might take another third of a position, dollar cost averaging. And if they see the 20-period moving average go green again, they might say, I'm going to take the last third position, okay? Now, if it really starts going up, you're going to probably say, geez, I wish I would have bought on the first, all of it. Well, what's the advantage of doing this? Well, you start to focus. You start to concentrate. You start to actually say, I think I know what I'm doing now, okay? It doesn't matter we take an entry of 1, 2, 3. They all have risk to them, all of them, okay? Now, what I'm going to do is let's kind of look and see where did this start to turn. So if the investor said, look, I'm going to get in a third, they might have said on the 10th. They go forward to the very next day. The 20-period moving average goes green first. There's the second entry. And then if we actually take a look at this, where was the cross? Well, the cross was really on the date of the 15th, which was yesterday. So I'm just going to count slowly. 1, 2, 2, 3. Okay? 1, 2, 3. Either way, I don't care how you say it. Or French. I don't know if they're French. Someone tell me the French. So the reason why I want to kind of break this down is I think when things pull back, people are nervous to get in. But what if you did it with a small position size and then waited for more confirmation and get in more, and then waited for more confirmation to get in more? Well, I think if you break up the entries like that, the investor might be more apt to take those. Now, what you're now going to notice is we can now see that turn now and a little push to the upside. Now, the investor might say a comment like, well, geez, it would have been great if we got in before, but now we're too late. You ever heard that before? Well, the moral of the story is the trend, if you go back and really look at this, if we make a higher high, the highest likelihood is a higher low. So the idea is if it pulls back a little bit, the investor might say, I'm looking for a bounce, okay? You just kind of had a pullback. Do you realize that? You just had a pullback. And if the investor could count to three, uno, dos, tres, eins, zwei, drei, and just traded what they saw, they don't know what's going to happen, but it was a setup, which means every entry had risk to it. Now, what I'm going to do is I'm going to right-click on this chart, buy custom with OCO bracket. Now, James, why are you counting to three so much today? Because I think we make it too complicated, okay? I think all of a sudden people can kind of let their emotions get involved, okay? Now, do you know what I mean by that? Your emotions getting involved. Now, a lot of times my emotions, it doesn't matter how I feel a lot of times. It doesn't matter. I don't want to make this phone call. I don't want to do this. A lot of times you say, look, I don't want it. But you know that if you're trying to be disciplined to something, hey, it'd probably be in your best interest to follow through on the task or so on, okay? Now, I'm just going to trade what we see, okay? Now, got the price of 60.22. We're going to buy the shares, okay? Now, let me do this. I'm going to go right here to this IRA account. And what I'm going to do here is I'm going to take that. I'm going to go bring up that order right there. By the way, I'll put the moving averages back on. Right-click, buy custom with OCO bracket. So I got 60.22, okay? Now, when I look at, let's say, the stop, we're thinking, where has there been support? Lots of lower shadows on this, okay? And where are those lower shadows? 58.40. Well, if we take 58.40, okay, and we said, okay, 58.40 less 2 to 3%, I'll be nice and I'll even give it 3%, okay? Give it a little extra 58 cents. And it's going to give us an exit if we were to go at or below that price, trigger it to sell. Don't know if we're going to get out that price. We're going to find out. 56.64. All right, so here we go. Okay. Now, remember I made this comment before that Cisco was showing relative strength compared to other tech stocks. When I make that comment, that doesn't mean that it's an entry at that point. You need the moving averages to start to turn. Uno, dos, tres. Eins, zwei, drei. 1, 2, 3. Right? Looking for that confirmation. Now, this is getting in all of it. Okay? Now, going forward, because I think a lot of people, when they're starting to get into positions, they're nervous on getting in. They want more confirmation. Fine. Let's help those people and kind of practice those entries. Okay? Now, what I'm going to do in this case, and by the way, I think it's going to help the person focus. Okay? Now, what I'm going to do is, what about the target? Well, if I were going to go back and look at this on, let's say, a 3-year weekly, this longer term, you really kind of have a longer term horizontal resistance right around 57 and change. You could measure from there to there, there, down to there, or you might say, look, major resistance here, what might be the extension? Now, we're talking about trading the trend, not trading the candle, trading the trend. Now, if I took it from the extreme, okay, it's going to get us down from there, 57 down to 40. If I said, look, I want to be more realistic, maybe down to 41. If I said, look, I'm a pessimist, okay, I can look through a keyhole with both eyes. Some of you get that later. And what you're going to notice is I'm going to put that price projection right around 64.50, okay, dated GTC. Dated GTC. Now, if we take a look at this, we're in the IRA account. We're going to go with the number of shares. It's going to be about 100 shares, okay? We could do 100 shares. That's not too much, okay? Let me hook those up, and it's going to be minus 100. There you go, okay? So I want to kind of go back to the questions on the chart. Second, I want to go back to kind of Bob, and this is what I like to do. I like to follow through on some things, okay? Now, the one thing is, if we look at this trade, there it is, target, stop, okay? Now, what I'm going to do, now read that stop right there, which we see, and now what you're going to notice is there's no guarantee the execution price will be equal to or near the activation price. Understand, send the order. Now, I want to go back to something just real quick, to the trade that we did before, and it was on Visa, probably about 10 days or so ago. We said, hey, there was a question regarding if we had a vertical on Visa. And the question was, can we trigger an exit if it were to get at or below a certain price? And so I showed how to do that. Now, the reason why we don't do that very much is Visa did break down. And so for about 3 days, we thought we were really smart. And then about 2 days ago, doink, 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 it's higher than where it was when we triggered out of the position. And we did not let the probabilities play out. We just kind of said, hey, I don't want to take any more risk. I don't care about the probabilities. It's about the money. Okay? Now, I want to go back to this just real quick. If we go to the monitor, we go to account statement, click on that. And what I'm going to do is say, show me the trades in, let's say, the last 30 days or so. And I can't remember if it's in the margin or the IRA, but I want to go back on Visa and I want to look at the history of this, okay? So we got in for a 260 debit, okay? That's when we got in. And then we got out for a 58-cent credit, okay? So on that, we probably lost about $320-ish or so on that position. And if we said, well, wonder if we just left it alone, okay? And let the probabilities play out. Bought it at 320, you bought the long call at 320 and sold the 325. So we know the price has to be greater than both strikes to get all the money, okay? To get that, to get the maximum gain. So I want to go look at the chart, the charges real quick and say, where are we? We're at 317. So we wouldn't be at maximum gain yet, but we pretty much have 1 day left. But the problem with this is we just locked in the loss, and we might have gotten away for a smaller loss if we would have just let the position play itself out. So the reason why I bring up this story is you're not going to see me do that anymore, okay? We're going to let them play out, and we're going to let them go down to the week of the expiration, okay? And we're going to try to let those probabilities play out. I don't care what type of option trades they are. We're not going to trigger to sell. The only reason why this paper money account might show the example of that, if we had a ton of positions and we said, look, we need to try to consider exiting some positions, we have too many positions. We don't have too many positions because we're just trying to build a portfolio, okay? Now, was the loss, the $300 loss, greater than what the paper money could expect to lose? No, it was less. It was like a third of what it could normally lose, okay? So I just want to go back to that. In 2025, you won't see me do that again, okay? So there's a reason why we kind of like to let the probabilities play themselves out. But I think that's a good teaching tool. Now, if I go back to, like, say, its twin cousin, American Express, we talked about yesterday, that had a pretty good pop. Pretty interesting move on American Express. We talked about kind of that in terms of the shape of the consumer. Now, if we also take a look at, let's say, a stock like AMAT, okay? Now, AMAT has been one of those stocks that has really kind of been quite ugly. Because if you went back and look at this, and by the way, let me kind of go to the setup, open shared item, and let me put those moving averages back on, okay? So what I just did is myself is I'm going to bring this up right there, okay? Now, let me bring this up, AMAT, and what I'm going to do is once I have the chart up, I'm going to go to Style and then Save Style. You don't mind, I'm just going to call this the whole 1020, we'll call it 1020 cloud, okay? Now let's go to work here, okay? Got 10 minutes, let's pound it out. Style, load style, and then now you're going to see, there she is right there. Okay, good. Now, by the way, also on that chart, you're going to see the little dots as well, those whole dots, okay? Now, speaking of that, what we're going to do is we're going to draw a line. Now, we know when the market goes down, you better have an understanding of what diagonal resistance lines are. Now, the other day, Barbara, she lived in Toronto and she was saying diagonal. She's the only one that could probably get away with it because she lived close to Milwaukee. Okay? Now, if we take a look at this, what you're now going to notice is yesterday we did see a little price breakage of the moving averages and the trend line. We also see the green dots signifying close above the high of the low day, doink, to the upside. Now, if we go back to this just real quick, do we have any other lines here that we need to be aware of? Well, this old line, this low, low, and so on, we could probably take that all the way over. And then if you kind of take a look at this, kind of maybe have a midpoint there, but probably the top end of this is here. So if you said, James, I've been watching kind of this week, what are a lot of the setups we're seeing? We're seeing a lot of stocks that were below support and snapping back to the upside. Now, I'm going to kind of run this a little bit faster pace now. So what I'm going to do is I'm going to go to the trade tab for just a sec on AMAT. And what we're going to do is we're going to sell the pets. Okay. Now I'm going to do like kind of a, well, let me see what we have. Let me go to strikes. We're going to go 20, 50 days expiration on the monthly, 36 days. Fine. We're taking a look at the implied volatility, 42. We look at the kind of the delta between strike with a delta of 30 to 40. You got 180, 185. 180 is on the lower end of that range. Bid-ask spread 15 cents. If we said, look, I'm going to sell the 180 and I'm going to make this a vertical. Cash secured put like, but just kind of less maximum gain, less maximum loss given a vertical. We're going to sell the 180, thinking the price might stay above that, and then buy the downside protection. Now, what I'm going to try to do here is I'm going to open this up a little bit, okay? When I say open this up, we're going to go like the 170. Because if we're in the IRA account, we could take a max loss of $1,000-ish or close to it. If I said, what's the max loss? It's about 736. Or if I said the max loss, we could take a 750. We could just still widen out the strikes and still do one contract, which we're going to. Maximum profit given a vertical, 264. Break even, at expiration, max loss, and then there's the cost of the trade, including commission. So this is another example of a stock breaching a diagonal line of resistance, and you're also seeing in this case kind of another channel trade. So buying below support, breaching old support, new potential resistance, it fails, meaning it doesn't hold, and the price gets above and then quickly starts trading back inside that old channel. Now, another one I want to kind of have us keep an eye on is I have when you look at Constellation Energy, this has been a very interesting stock, okay? Now, the question is, when it says energy, is it like energy itself or is it like utilities? Now, what you're going to notice is a company sells natural gas, energy-related products, sustainable solutions, does nuclear, wind, solar, natural gas, hydroelectric assets. Now, some of you might say, I don't know what half that means. Well, join the crew, okay? Now, if we take a look at this, I want to go back to this and kind of say, okay, is this something maybe liquid, okay, that vertical fills on AMAT? When I go to the trade tab, almost 3 million shares. And when you look at the options, they are really, really wide, okay? Now, we're not going to do the example on the stock trade today, but what I'm going to do is I'm going to set an alert at the middle of this green candle. Right click on it. The options, you could drive a truck through them, okay? The bid-ask spreads, I mean. Click on create alert. And what we're going to say, look, mark at or above 310.62, we're going to call it S1 potential support bounce. Keep an eye on CEG because that one, when you talk about energy stocks, it's probably been one of the strongest names in that space of energy that I've seen, okay? Now, going to go back to this real quick. And by the way, I need to change that to at or below, but nevertheless, it is still good to show what does it look like when it pops up, okay? And by the way, it can text you and email you as well. Marvel, okay? Thank you, Brady. Now, I'm going to go back to Marvel. Now, if I ask you, Bill R., Dave Bennett, by the way, welcome, Michael, Riceberg, if I ask you, like, what type of trend do we have here? What would you say? Now, I like to kind of go back and say, wonder if I drew a line kind of just connecting these bottoms, right? Like low, low, low. I got a trend line there, okay? I got maybe like a low, low, low. You kind of got like some lower levels, okay? And then you kind of have this one, okay? So along the way, we've been seeing a slight incline. Now, lately, if we were going to kind of look at this and say, what do we have now? Kind of have some maybe horizontal resistance probably about right there. I'm going to tell you right now, as investors, it's possible to know a lot of stuff and not really be in the stocks that are upward trending. Have you ever had a year where maybe the market was up 20% and your portfolio was flat for the year? How's that possible? Most likely, you didn't ride the upward trending ones. Okay? Now, I think we've all been there. It's not a great place to be. Let's try to change that by trying to make sure that what we're in the paper money account, has a trend with it. Okay? Now, what I'm going to do is I'm going to buy in the paper money account a half position. So if we said normally we would be buying $6,000 worth of stock, we're going to buy $3,000 worth of stock. Okay? Now, when might the investor add the other half? Maybe when it breaks out, or maybe when it breaks out and pulls back and makes a higher low. By the end of the year, I'm going to make sure that you feel very comfortable with dollar cost averaging. So on this type of setup, what we're going to do in this case is we're going to buy the shares of the stock, some of them. I'm also going to come in here and say, look, let's click on the pool balls percent dollar amount. Let's go to type in 3,000. 3,000 is half of the budget that we normally can buy $6,000 worth of stock, okay? So half position. $3,000-ish is really 25 shares of stock. Now, it can't do fractional shares, okay? At least in my paper money account. I'm going to do 25 shares. There it is. Now, what I'm going to do is underneath this trend line, we're going to take the stop underneath. Now, here's the thing. We are not going to set the stops too tight because the goal is not to get stopped out. The goal is to try to ride that trend. Now, if I set a stop underneath the diagonal line, it's going to give us 111.30. 111.31 to be exact if you want to round up. I'll round down just another penny, dated GTC. Now, as far as a target on this, okay? Now, if we kind of looked at the target on this and kind of said, okay, what do we have? If I kind of said right here, ascending triangle. On the ascending triangle, how do you measure? Do you take it from the widest point? Yes. No, that's if you're hopeful, okay? So if we kind of took it from there, we got about 105, maybe 120. That measurement would be 15. That's if you were very, very, very aggressive on the target. Bottom end there is 107 to 120. This is about 13. And then if we kind of took another measurement, maybe about 110 to the 120, this is about 10. Now, just like in basic statistics, you got like an outlier on the bottom and the outlier typically on the top. You got a left tail and right tail. So a lot of times what a lot of people will do as a statistician or a technician, they'll take the middle target where it probably has the greatest statistical odds of maybe going up to that. Not 100%, but they're saying, hey, I'm not going to take 10, might be too short. I'm not going to take 15, might be too high. So I'm going to kind of take it more in that middle range. Now, what I'm going to do is let's kind of take it from 120, add 13 to the top. And if we did that, it's going to give us 133. Okay. Now, here's what I want you to do for a homework assignment. If you have not made those lists, I doubt that you feel very comfortable looking at the markets, and I doubt that you feel very comfortable to do it quickly. I want you to make those lists. I want you to also watch for some stocks or find some that are that were below support and then now starting to break up above. That's what I want you to do for homework. There's a lot of them. Okay? I want you to be watching for that and then identifying those setups. Set up the whole moving averages on your chart. Start practicing to 1, 2, 3. Can you see the transition? Can you see where those position size are, those dollar cost averaging spots could have been? That's what I want you to do for homework. Now, I'm out of my time here today. If you have not subscribed to the Trader Talks channel, do so. It's the simplest thing to do. Just go to youtube.com, type in Trader Talks Schwab Coaching Webcast, right in the middle of the page, bang, subscribe. Now, if you said, well, where's the playlist for this class? Where can I actually go back and see other classes as well? There's our TiVo playlist, if you will, of prior classes. Make sure you watch those because you'll really get a sense of really how we teach and why we teach the way that we do. Now, I'm out of my time here today. I want to thank you for your comments, your questions, and participation. Thank you, Brent, as well. And also remember that coming up, we will have a class coming up right at the top of the hour, so stay tuned. Remember with what we talked about, it was done for example, illustrative purposes only. And this has been the class on trading the trend. Thank you so much. Have a great day. Stay tuned for our next webcast coming up next.